Yeah. Good evening, friends. Welcome to this sixth webinar of CPE Committee, and the God has been great. We have been listening on every Saturday on two world experts on different topics, and like always a question comes, whether client first or knowledge first. I always believe that it is knowledge first. And when we look at the subject, we may get many ideas. Okay, this subject is so good. Let us go deep into it, learn more into it. When we listen a subject, we get an idea. Okay, among our existing clients whom I can serve, or who are the clients who came to me and I said no on earlier occasions. So we have CA Sunay speaking to us on interpretation, which we have been doing, comma, full stop, inclusive definition, exclusive. There is a small legislation called General Clauses Act 1897. Now we got independence in 1947. Somebody may say how this is applicable. Now after independence, Parliament passed one resolution. All the laws which were there made by British Parliament will be applicable to independent India unless they are repealed. So we have Indian Contract Act 1872, we have Transfer of Property Act 1881, we have Societies Registration Act 1860, and like this IPC is 1860, so far not amended, very few amendments, 511 sections. And we have a Subham, Sonipat branch managing committee member who will be coordinating this. And Madam Sudha, she is a FEMA expert and FDI policy. FEMA is a very beautiful legislation. Only 49 sections are there of 99 legislation, and there are few regulations, 30 plus regulations, and few handful rules. And FDI policy, which is a consolidated document, a circular on foreign direct investment. So we have, a lot of treats for our mind in these 2 hours. And I'm very lucky that Vice Chairman of the committee, who has been, always, while in the Vice Chairman, we have 2 words, Chairman and Vice, because the Vice Chairman does double the work of the Chairman. So welcome to you, Gyanji, and the floor is yours.
Thank you so much, sir. Actually, this is my really pleasure to be part of CPEC team under your great leadership. Highly respected Chairman, sir, and of course, today's speakers on the topic who have been very kind enough to give their kind consent, Jariwala ji and G. Bhushan ji, on both the topics, and of course, moderator Subham ji, and all the officers of the Committee of Continuing Professional Education. Good evening to all of you. This is really pertinent to see that such important topic is being going to be discussed today. The thing is that interpretation of the statutes is very integral part for the professionals, and of course for the judiciary. This is the backbone, because interpretation by which we come to know how the law is literally being done and how it is being constructed, depending on the situation to situation. And of course, FDI is need of our as the developing country, and I'm sure this virtual webinar is going to benefit the members at large. And I wish all the best to the organizing team, our committee members, and my good wishes to all the participants for such a wonderful learning. I will not take much time. Over to Rajkumar sir for furtherance of the program. Thank you.
Thank you, Gyanji. And tomorrow, of the 15 branches of Rajasthan, we are doing all Rajasthan webinar from 9:30 a.m. to 1:30 p.m. And similarly, on Tuesday, we are doing all Gujarat webinars. So there are a lot of, and Sudha Bhusanji is coordinating one FEMA webinar, series of webinars starting next Monday, 25th of April, Monday to Thursday, and then 2nd to 5th. So we have a lot of things in store, and please come forward to be a speaker, to be a writer, to be a moderator, like how Subham has come forward, and any other things for writing. The ICAI pays 500 rupees per page. So if one writes 200 pages, one will get a reasonable amount of 1 lakh rupees. Conditions apply, the committee has to do the weighting, and it should be acceptable, it should be original, good quality. Thank you so much. Over to you, Subham, to coordinate the program.
Thank you so much, Rajkumar sir and Gyan sir, for elaborating this wonderful session. I'm sure this will be a great evening and we, since have you as well as sir here, this will surely be a great evening. Good evening, everyone. I am C.A. Shubham Garg, moderator of this VCM. We are delighted to welcome all of you in this VCM, which is being organized by this Continuing Professional Education Committee of ICAI. It's my pleasure to be the moderator of this session on VCM, interpretation of statutes and Indian FDI policy. In a short while, we will start with this VCM. I would like to appraise about our CPE committee. The profession of this chartered accountancy has always been recognized for the quality of education, training, and strong grip over the technical standards. With globalization and increasing business complexity, it is essential that the chartered accountants equip themselves with the changing occurrence and standing out the expectation of the society. Our institute is constantly working and contributing to cater to the needs of the requirement of members and has taken various initiatives for them from time to time in this direction. With this view, Continuing Professional Education CPE Committee of ICAI has always been the foremost to provide opportunities to the member to boost their knowledge base. The program of this evening is as follows. We have 2 sessions of 1 hour each, and the topics are interpretation of statutes, which will be taken by Sane sir, and second is the Indian FDI policy, which will be taken up by Sudha ma'am. Our eminent speakers will talk about the above mentioned 2 emerging areas of professional interest. The idea of this webinar is to get a understanding of the true meaning of words used in the statutes. This not only help us in interpreting the law correctly, but also to understand the true essence of the enactment by giving natural and ordinary meaning. I promise, friends, this is going to be a very exciting and interesting webinar. So moving towards our first speaker, C.A. Sanay Jariwala ji, who is a practicing chartered accountant with over 16 years of experience in internal audits, project financing, service tax, and GST. He is also an empaneled faculty for indirect taxes of ICAI and a member of Indirect Tax Committee of Management Accounting of ICAI. Further, he is an author of the book named Decoding Input Tax Credit Under GST. Really wow, Sanesh ji, really great. He has also conducted numerous seminars and presentation on service tax and GST for organizations like MSME, CII, and other business federation, etc., etc. So I invite C.A. Sanay Jariwala ji for providing his valuable insights and enlighten us with the expanse of knowledge that you have. Over to you, Sanjay.
Very good evening to all. Thank you, Shubham. Friends,
Thank you.
anything is easy if someone tells us how to do it. So today in this session, let's come together and learn little bit of rules of interpretation of statute. Devi and Sajjano, a very warm welcome to this 6th virtual CPE program, and my hearty thanks to the organizing chairman, CA Sir Rajkumar Adukia ji, Vice Chairman Gyan Mishra ji, my colleague and moderator Shubham here. Greetings to co-speaker Sudha ji, tech team, and the ICAI body staff member Chanda ji. Very warm welcome. I'll just share up my PPT. Is the screen visible, Shubham?
Yes.
Yes, sir.
Yes, friends. The subject and the topic, as it says, interpretation of statutes. It is more of a theoretical and somewhat a complex subject in itself. Given the paucity of time, we'll just see the relevant aspects, as this is a subject in itself and it can't be covered in a 1 or 2 session. So friends, before moving on with it, let's just go through these words. Interpretation of statutes. We all members of the profession and others in today's session, we all are seeing and learning the provisions of taxation, maybe direct tax, indirect tax, and some other allied laws. Reading and understanding those provisions are a part of the draftman, यानी कि जिन्होंने law लिखा है, the draftsmen have made this law, and we all are reading the provisions, sections, and trying to understand the same. Now, the first word, interpretation, has a very vital role in our today's session. Today's session will be covering just 2 main aspects. One, to know and understand what is interpretation, meaning of interpretation, how and what was the history by which it is derived, and 3 fundamental rules of interpretation. So friends, with this opening remarks, let's move on with our presentation today evening. Before we go on with the rules of interpretation, I would just like to highlight some little brief history from where and how these rules have been derived and are coming forward. I'll take you way back to the 18th century, 1899 to be precise. A theory of legal interpretation was firstly documented by the learned American judiciary judge cum scholar Mr. Oliver Holmes. In the history, friends, he has been at the highest age of 90. He was a serving Supreme Court judge at that time. Really amazing. In one of the documentation, the publication for which he had written Harvard Law Review, he had put up a reference paper from where the birth of theory of interpretation and theory of law has come up. Friends, in day-to-day talks or our professional life, we might be listening the words interpretation of law, rules of interpretation. Then let me remind you that there are few basic derived rules, but there isn't any index. There isn't a fixed schedule or a menu card of rules. These rules have been derived over time. It is in a progressive manner, and they have been written, rewritten, and it will be ever changing. In this brief excerpt, Mr. Holmes, few things which he had described then at the end, in the beginning of the 19th century, are also relevant today, late after 120 years. So, my dear friends, law, provisions, wordings, language, all combined together plays a very vital and important role for our interpretation of statutes. In our day-to-day life now, as GST litigation is opening up its Pandora box, we all might be referring to the current 4 years ARs, case laws, high court judgments, maybe at times going backwards in the pre-GST era, having a look at the erstwhile law cases, etc. But friends, let me remind you that to read and know this case laws, that what was the fact, what was derived, what judgment we got, is really important. But it is all the more important to look at the background by which rules, by which mindset the judiciary, lawyers, and judges are interpreting these laws and provisions, and then they are giving their judgments. Moving forward, we may just read the facts, case law, what was held, what was the judgment. We pick up the preferable or favor of assessing judgments, and we cite it in our representation, reply letter, litigation purposes. That's fine and good. But if a new aspect or new case arises which wasn't decided earlier, then in what manner the judiciary will interpret it? If we want to know answer to this, then yes, friends, we have come to the right place. In today's session, we will see how these untouched new areas are being interpreted by the judiciary. Going back to Mr. Holmes' review excerpt, I'll just pick up a couple of words from the important paragraph, and you will agree with me that the man who had written those words then are still relevant today. He says a word generally has several meanings, as in the dictionary. But we have to consider the sentence which stands to decide the meaning it bears in the particular case. Means, apart from just taking or being attached to the meaning of this word, we need to consider it in its context. वो किस संदर्भ में बताया गया है, या in which manner the draftsman intended to write those words, provisions, or paragraph is of utmost importance. It bears in the particular case, and very likely we'll see that there is a shade of significance more refined than any given word book. Means he wants to explain that the words are there, but the meaning behind, the context behind those words is to be seen first. Words needs to be considered secondarily. It will be made clear as we proceed with our today's presentation. Thereupon we ask not what this man meant, but what those words would mean in the mouth of the normal speaker of English. Meaning thereby, what he said or what we interpreted is of less importance, but those words, how they are understood in today's market, today's public place, today's world, that is of prima facie importance. We'll just touch upon those lines again for clarity, and then we'll move further. Thereupon we ask not what this man meant, but what those words would mean in general public, meaning thereby would mean in the mouth of a normal speaker of English. The question is how far the law ought to go in the aid of writers. In Contract Acts, we have seen the contract, act and agreement needs to be seen as a whole. There might be cases, there are some clauses in it which may not define the clear purpose of the agreement, but all the clauses put together, they need to be seen in a wholesome way on a broader perspective. As there was an ancient controversy that if a thing is lost and a finder finds the thing which has been lost and thrown away by the owner, he will get a title to it. But will this title be considered valid? Is it a legal title, or this title would be denied? Before moving to the rules of interpretation, meaning and reasoning of this word interpretation in itself, friends, is very important. See, friends, please understand one thing. As I said in the beginning of this session, there are just two important points for my today's topic. First is surrounding the word interpretation, and second is fundamental rules of interpretation. There are around 7 rules of interpretation. We'll be taking up and covering just 3 basic fundamental rules. But the reason I'm putting so much stress on explaining this term interpretation is that this whole is the reasoning behind the entire theory law of rules of interpretation. इंटरप्रिटेशन का ये पूरा जो सब्जेक्ट है, उसके पीछे का जो बैकबोन या बेस है, it is entirely if we understand the real meaning and essence of the word interpretation, that how we should look at things, how things are derived, and how to get a meaning when words used don't give us a proper meaning, or they are absurd, or they give us contradictory meanings. I hope you all are with me. Let's move on. Salman said the essence of law lies in the spirit, not its letter. For the letter is significant only as far as being the external manifestation of the intention that underlies it. Means, friends, the context, the reason why the legislature had made that law, that purpose, object, context, is of prime importance. Words have a secondary meaning. Words, the provisions are important only so far so said as much as they behave and want to prove the intention of the law. जब तक वो words law का intention को मायने दे रहे हैं, तभी वो relevant है. If at some point of time the draftsman might have used some words which may seem irrelevant or absurd for a particular case, or for example, when times changes and the law remains the same or law has not been updated, then those issues may arise. For example, I am remembered of the fact that once a case had come up that is radio a means of communication or not? In the erstwhile era after independence, there was a time where VAT was exempt on communication tools. So the stand was taken that in communication, as we see and we know, there are 2 persons communicating. When I am communicating, the meaning I want to impact or communicate is being reached to the receiver, the listener, and he understands in the same manner I want him to understand. But in case of radio, what happens? At the other end, there is a listener only. He cannot say something. Even if he says, the meaning won't travel back to the radio station. So that was the lacune, and that was the reason case had come up. As in a normal parlance, we may say yes, or we may understand that yes, radio is a tool of communication itself. But when it comes to law, it comes to provision, then things have to be seen with a different eyes, with a different lens. Interpretation is the art of finding out the true sense of an enactment. Main heart, the main context of the enactment of the law. By giving the words of the enactment, means the words used in the law, the provisions, they are natural and ordinary meaning. The words, the provisions is used, we have to see it in a general and a normal and a natural sense. It is the process of ascertaining the true meaning of the words used in a statute. Because as we know, for any given matter, we can interpret in many different ways. Just to give you a common life simple example, let's say we are near a college campus. In front of us, we see a girl and a boy, they're talking to each other. We see that girl is continuously, interestedly talking to the boy. The boy attempts or tries to listen, but he's also not paying good attention to her face and her talks, and is looking here and there. He's checking out his bike keys, he's checking out his mobile phone, etc. Now they depart, they go apart. So there are 2 or 3 interpretations of this event, of this picture possible. Once the girl goes back to her home, she may think that I was keen talking to this guy, but maybe the guy is not interested. The guy, after departing from that spot, he's rushing towards a bank where his father is waiting for some important documentation. The guy's friend who was seeing this whole picture, he takes out a different meaning out of it. So friend, for an event happening, all of us can take different meanings out of it. I mean, it is our own interpretation. There is nothing wrong or right in a personal interpretation, but when the same things are applied to law, it becomes different. Under law, things have to be seen with that same eyes, same vision, same specs, as it was the context of the law, as it was the intention of the lawmakers. I hope I've made my point clear. What is on the aspect of meaning of interpretation, why it is important. Because to read, know, or understand any laws which we are having in our work career and professional life, we need to go one step backwards and see its formation, its interpretation, it's like the why factor. Once we are thorough with this logic and concept of interpretation and the why factor, then further reading or reading new laws, as we know, there are not many changes coming up in GST with issue of n number of notification circulars in couple of days. Then we can really get an idea of what this circulars notification mean, why are they being put up, what updates are being made by the legislature or the draftsman, and what was the reason behind this. Another aspect, courts, the judiciary. See friends, as you all know, law has been made by the legislature, by the parliament. The draftsman team, the person, they make the law. It has been discussed, amended, not amended, passed, and made an act and law in its whole by the process of the legislature. Courts, they come into play when question of law, issue of interpretation arises. Of course, as mentioned and as we'll discuss and see in today's session, in different cases, different circumstances, the same law, the same provision may not fit, may not give the exact same reason. And this statement can be backed by, we have seen couple of judgments even in GST current regime, that for the same fact, same matter, two high courts have given different kinds of judgments. Coming back, the court is not expected to interpret arbitrarily, and therefore they have certain principles which have evolved out of the continuous exercise of courts. These principles are sometimes called rules of interpretation. So friends, we've seen the history from where it originated. It has come. At that time, it was called theory of law. In today's time, now it's called rules of interpretation. Why is interpretation required? Until now, we have discussed and I've given you a couple of examples already on the same. We'll quickly go through this slide. We have many more things to cover. In certain cases, more than one meaning is being derived from the same word or sentence. Hence, it becomes important to interpret the same to find the real intention of the statute. Okay. Concept of interpretation of statute cannot be a static one. As I mentioned, today's are the faster changing time with new technology, world is shrinking, communication means, AI coming up, so many things are happening around. So the statute cannot be a static one. It needs to come and get newer facts, newer meanings. For example, communication sent via WhatsApp was once declared valid. Now, when the law was enacted, maybe at that time there was nothing known or called as WhatsApp. So later on, when WhatsApp was come into existence, things needed to be changed. Legislative intent. The important aspect is this. The concept of meaning, what the word means. But before that, I'm of the personal opinion, the concept of purpose and object comes first. The concept of purpose, object, or reason or spirit prevailing through the statute. This should be seen first. Words have a secondary meaning. Of course, words are an integral part of the language, and hence they are important because only language can describe and tell what things should be done in which manner. Legislative language may be complicated for a layman and hence may require interpretation. A special skill is required to understand this meaning. We all are professional brothers and sisters here, so we know on that aspect. Principles of interpretation. What was the base on which these principles came into being and these rules have been formed up? We've already discussed on intention. Statutes must be read as a whole in a context. Means we cannot take up just a couple of favorable provisions out of it and ignore the rest, or maybe take up favorable clauses out of a rent agreement and ignore the rest in case of contract act. Another important aspect is, friends, if meaning is plain and simple, effect must be given to irrespective of the consequences or the result. If the wordings are plain and simple, then effect of that law and act needs to be given. Courts and judiciary, they are not in the power to change or amend the law. The process of construction means the process of deriving the meaning combines both the literal, what the word wants to say, and purposive approach. What was the purpose? What was the context? What was the object behind it? Based on these few principles, the entire rules of interpretation, the eye's vision of seeing the law, interpreting the law, reading the law by the judiciary is being taking place. Here I'm reminded of another important case law which took place last year in EU courts, European courts, wherein the Subway bread was declared not considered as a bread just because of its higher sugar content. So friends, law can be at times, I would say, strange, or it may come out with different conclusions. The thing which people are seeing and eating as a bread for some purposes, now it was declared by the then court that it is not a bread. We had a very famous AR of on roti or paratha on the same under GST. Purposive rules suggest that you should shift from literal construction when it leads to absurdity. If we are following the words as they are in the plain and natural and simple meaning, but we think that if we follow the same, the answer or the result would be absurd, complex, difficult, not meant by law, then we need to drop this rule and look forward for the next rule in line, which can give us a better meaning, better interpretation of the law. We are moving further. Importance of Latin language. We must have seen there have been many Latin legal magazines. I mean the legal phrases which are usually used during the hearings and also the written representation in law. In the earlier times, the knowledge of Latin was confined to a very educated crowd and a scholarly people. So it was thought that those who know Latin, they have a special ability to critically think, analyze, and solve problems in a methodical manner. And hence, in the then earlier times, there was importance of Latin language and many legal terms which we see even today in the form of phrases, they're in Latin. I'm just flipping up this slide so we can move to the rules, seeing the positive in time. Yeah, the important aspect, I'm referring to just the last para. The judiciary is not allowed to add words or fill in gaps on account of lacuna or some error of the draftsman. On the other hand, effort should be made to give meaning to each and every word used by the legislature. So the courts cannot add or delete the words which are there now in the legislature, in the law, but their role lies just to see how they can derive a proper and a good meaning out of those provisions, the words or the statements. The first and the basic rule, it is rule of literal construction. I've noted few other points in regards of interpretation. I would like to take it up in the end. We'll have these three fundamental rules, couple of case laws also to know the meaning and to make this session little more interesting. Then we can again move back to our subject matter on the word interpretation. Rule of literal construction. As the word says, literal means bookish. Jaisa hai, the way it is, the way dictionary meaning comes, the way this word is understood by normal person, by in the mouths of a normal English speaker. In the literal rule, intention of Parliament while framing the statute is simple: natural and ordinary meaning of the words used. This we have already seen. Words of statute are to be understood in their natural ordinary meaning, unless it leads to some absurdity or complexities. If not, then you have to follow it, irrespective of the consequences or the result. अगर ये words plain और simple है, then we need to follow it, not looking forward for the outcome by following the same. क्योंकि वो outcome का ख्याल ध्यान the legislature, the draftsman would have already made before making it a law. No judge can and shall deviate from the meaning of the statute, though decision may be unjust. This rule accepts the supremacy of the parliament. Parliament is whole and soul, the right to make laws, even though sometimes they seem absurd, but we will follow it. Yeah, we'll go through an interesting case and understand this rule. Famous case of first raising company in High Court of Madras against Income Tax Commissioner. Friends, what happened now? At that time, it was declared that if an object which is considered as plant and machinery, if that asset is having below value of 750, then the proviso will apply and assessee will be able to claim 100% depreciation on it. This first raising company was into manufacturing of soft drinks. So they used to buy and lease out this glass bottles. In earlier days, as we all might know, soft drinks was being served in coming in glass bottles rather than PET bottles at present. Now, what happened in this case? This case went up to the High Court. So the revenue under the appeals and tribunal, they accepted the fact that this bottle, glass bottle, is considered as plant and machinery. Just the aspect on which this case came up to High Court was only question as to whether individual bottles can be regarded as plant for the purpose of first proviso of this section. The proviso read like this: provided by actual cost of plant and machinery does not exceed 750 rupees, the actual cost shall be allowed as deduction in respect of previous in which it is first put to use. Friends, the revenue argued that being a bottling plant and a manufacturing of soft drinks, the first leasing company is buying bottles in bulk. They are buying it in bulk, using it in bulk. Because as you know, in a factory or in a manufacturing place, with one bottle of soft drink, it won't serve any purpose. So the question was, if they're buying in bulk and using it in bulk, then would this bulk of bottles be covered under this proviso? Now the High Court have taken the stand that it is not the policy of law to introduce complexities when matters can be dealt in a simple and straightforward manner, unless there are any compelling reasons evident from the context. Now, friends, what happens? The proviso says the actual cost of any machinery or plant. Now, just because the use of the word any, going through the dictionary meaning, just 1 unit of bottle, single bottle will also fall under this definition. And also the single bottle is independent to be used on its own without being dependent on bulk of bottles or other bottles. Meaning thereby, as the single bottle would be considered as plant and machinery, it can be used independently. The question which the revenue raised, that the assess is buying in bulk, processing and sending it in bulk, it's not to be considered. Just on literal interpretation of the proviso where this word any was mentioned, this matter went in favor of the assessor. In the light of discussion following paragraph, we answer the question referred to disallowance of SSC claim by 100% DAP on bottles leased out by SSC went in favor of SSC and against the revenue. So friends, here the courts took help of literal interpretation. जब लिखा है word is any, the bottle classifies as plant and machinery, then that abstract thought that they only buy in bulk, send in bulk, dispatch in bulk shouldn't be considered, and assessee is allowed for this 100% depreciation under the proviso. Next was another interesting case, Fisher versus Bell. This is a old case. Shubham, do inform me before 5 minutes when I have to stop. I'll conclude. Still time, friends.
Sure.
What were the facts? The defendant shopkeeper, he was having a shop, like a showroom. In his shop window, he had put a flick knife accompanied with a price tag displayed behind it. He was charged for offering the sale of a flick knife. Friends, please pay attention. The words are important over here. He was charged with offering for sale of a flick knife, which was not allowed under the Restriction of Offensive Weapons Act at that time. So the matter came to the courts. The issue arises that is this a sale or an offer to sale? Is the shopkeeper guilty? The issue is whether display constituted an offer of sale. If yes, the shopkeeper was guilty. If it was just an invitation to treat or invitation to invite, then the shopkeeper would not be guilty. Why? If it is considered as invitation to invite or treat, and if someone steps in to buy or ask for the knife, then the shopkeeper had the decision power with himself that do you have the license? Are you covered under this restriction? Show me the license, then I can offer you the knife or I can sell you the knife. Something like that. Now, friends, the courts use the general principle of contract law, wherein they came out with the conclusion that display of an item in a shop is an invitation to potential customers to treat, and it's not an offer of sale. Just because as it looks that the knife is being offered for sale, in legal terms, the position in window was considered as inviting customers to offer to buy it. I mean, friends, there's a very thin line between it. It all depends on the way you look at it, the way you interpret in it. I mean, this was the way judges interpreted in the then case, that it has been considered as an not an offer to sale, but an invitation to treat or invitation to sell, and hence the defendant, the shopkeeper, was not guilty, for which he had been charged. Second interesting rule is the golden rule. what may happen if the words of the provisions are to be followed without applying the mind, followed blindly, followed as its whole. So in those cases, we need to refer to the second rule, which is the golden rule. This rule comes up to avoid consequences of a literal interpretation, wherein it would lead into absurdity or would give rise to a situation which is not in favor of general public at large. To avoid such a situation, this rule has been enacted or come into place. There are two aspects in applying this rule. One is the narrower sense. When there are some words which give rise to complexity, absurdity, then we need to ignore those words, take the context of the whole, apply it, and give the verdict or decision in that sense, in that angle. The second aspect is purposive construction, which we have already discussed earlier. In wider sense, it may be applied to avoid a negative result on public policy. Even where words may prima facie carry only one meaning. अगर उनका एक ही मतलब निकलता हो, but if it is against the general interest of the public and the nation at large, and the object of law would not remain proper, then we need to resort back to golden rule, ignoring the literal interpretation rule. So friends, basically there are a series of rules and aspects to take help of in interpretation by the judiciary. Which one to implement or under which rule to take up the meaning and give the verdict, that becomes an important aspect in the hands, in the minds of the judiciary. Mischief rule. Before going further, I'd like to give a simple example of the golden rule, wherein it was laid at under the Estate Act that if a mother dies, the legal heir next is his son, then mother's property will go to the son. This is the general legal estate enactment. But in a particular case, unfortunately, it so happened that the son had murdered his wife, his mother. So if we follow the literal rule and the normal provisions, the estate would go in the hands of the son. But as the son was the murderer of his own mother, the law, the Estate Act did not be applied, and the law restricted from passing the mother's property in the son's hands. So friends, rules of interpretations are there. We cannot use them blindly, or if we come across one rule, it is not important that we need to stick to that rule, take out the meaning, take out its essence as per the rule, apply the particular case and give the results. The entire aspect, the whole ambit, it has to be seen in wholesome context at a 360 degrees. Mischief rule. So here, Shubham, how much more time, please?
5 minutes, sir.
Okay, then friends, before going further, I've got a couple of other notings which I would like to share with you, which are more relevant over here. As we have taken up this slide, I'll just explain it in a brief. Mischief rule, also called at Hayden's case law, Hayden's rule. It gives judges a more liberal hand if they don't want to fall into literal or golden rule. Then they can opt for this third fundamental rule, which is called the mischief rule. Under this, there are 4 basic important parameters which they need to see. We'll just go through them. These are the 4 fundamental aspects on which mischief rule has been derived, and it was there. It goes late back to Hayden's case of 1584. Friends, we are not discussing this case in particular, but the summary important briefings of this judgment we are taking up. What was the common law before making of the act? Friends, and these 4 points are also relevant in today's GST era. If you apply it, then you will see how it is relevant. What was the common law before making the act? What was the mischief? Means the defect for which the common law did not provide. We have seen many shortcomings of erstwhile law have been amended under GST Act. What remedy Parliament has resolved and appointed to cure the disease of the Commonwealth? Enactment of new Act. What is the true reason of the remedy? To safeguard interests of revenue, to see curb tax evasions, etc. Friends, before we end, I'll just take up few of the notings which are more important to know and understand the meaning of interpretation. Apart from the rules, in my personal humble opinion, to know how this interpretation works is of prima facie importance. It will also be helpful to all of us seeing into direct tax, indirect tax litigation cases. Purpose of interpretation is to unlock the lock which has been applied by the legislature, by the law of draftsman. Draftsman ki jahan bhi kuch khamiyan, kamiyan, ya if those things are not relevant in the particular case, then it can be resolved. This is one of the purpose of interpretation. Secondly, it is there to avoid the defeat of the object, main purpose of the law enactment. Third, it is there to give grammatical meaning. But as we discussed during the earlier session, that the object and context of the law is of primary importance. Words are of secondary importance over here. So it needs to be looked from all the angles. We have to see it in a wholesome manner and then decide. Just 2 more minutes. One of the cases which we just left was of Pyare Lal. In it, it happens that the law was enacted that sweetening of supari, the thing which we add in pan and other eatables, artificial sweetening of supari was not allowed under the act. Now the assessee responded that supari is not a food item. So the court held that if we go by the dictionary meaning of food item, then yes, supari is not a food item. But to avoid these things, to avoid this mischief by not considering like supari is not a food item and hence this act wouldn't be applied, these provisions wouldn't be applied over here, then it would endanger the health, public life and public health. In such case, court takes a broader view, a different view, and they had held Pyare Lal guilty of adding artificial sweetener to supari. So friends, literal meaning, dictionary meanings are also important. The context and object of law is also of primary importance. There are few other rules and also there are internal and external aids to interpretation. As I said, interpretation of statutes is a subject in its whole. So those are planning and wishing to move forward in litigation areas, then please refer them. It will be very helpful in our future professional practice aspect. Now, as we have another co-speaker with us and the time is already up, I would hand it over to Shubham. Hope everyone had a nice session with us and got the few brief summarized tips under interpretation. Thank you, friends. Over to you, Shubham.
Thank you, Thank you, Suneji, for giving us the wonderful insights on this important topic. I'm sure if I was not bounded with the time limit, I am surely going to, listen to your words as long as possible. It's a never-ending thing, because there are a couple of things which I find very much interested in this. Like, if I summarize some of the things, one word may have different meanings, but we should understand the true essence of it before interpreting it or while interpreting it. Thank you for also sharing some of the case studies that you are sharing to make us better understanding, for the better understanding of all of us, and also for in one such case, you have also cleared my doubts personally, I would say, where you have I thought of like why we usually have Latin phrases. So that you have also taken a very I would say nicely. Thanks for taking this time. I hope let's move on to the Q&A session. There is one question from Sundarababu. He's saying that when a legislation specified retrospective application, what are the tests of reasonableness against which a legality of such application be vetted? For example, if it imposes pecuniary liability for an act or omission expected at a retrospective date. If I do I need to repeat this?
No. I got the intention of the question maker. See, friends, basically, there's always a debate between retrospective and prospective. At times, the legislature have always declared in earlier times that we won't make any retrospective changes. But in current scenario, in many other aspects, we are seeing that the legislature is going apart from those enactments, and they're coming up with the proper legal channel by which, instead of prospective, they are making things retrospective and putting up in place. To just summarize, this is I would say, a long legal battle between the public and the lawmakers. Honorable judges from Supreme Court can take a call and put a question mark or stop on such aspects. I hope this clarifies.
Yeah, I'm sure our viewers are equally satisfied with all the answers, like I am personally. So even if in case someone may have any questions or which they have not asked it, request you to please send your queries to my lovely order. So next question is from Hemant Kothari. He wanted to understand what all good resources or book of interpretation of statutes are there. Also suggest a list of HC landmark cases for interpretation. Would presentation be emailed to all participants?
Yes, Hemant, I appreciate your curiosity and insightfulness to have for a greater learning ahead. There are a couple of books on rules of interpretation. I'm having one, so I'll just show it to you. This one is from Central Law Agency. Maybe because of the virtual background, we won't be able to see. It is of Professor T. Bhattacharya. There are a couple of many also available, so you can refer to them. But my one more simple advice is, like GST, this is an ongoing subject, ongoing topic. Please don't try to grasp it or read the book like a novel and finish it up in 1 month or few weeks. Keep it with you. इसको बारी-बारी देखते जाइए, धीरे-धीरे digest कीजिए. Try to take little as possible. Thanks.
I'm sure our viewer, like I said, they are equally satisfied, and we are I don't think we have a lot of questions now. So thank you so much, Suneji, for enlightening us, and especially especially taking your times on this weekend. Shall we move on to our next speaker and our next session on the topic Indian FDI policy? And we have our speaker, CS Sudha Bhushan ji, who is a chartered accountant and a company secretary. She is also an insolvency professional, registered valuer, and a registered independent director. She is an advisor to several multinational banks and have international operations over the globe. She is an expert in India FDI policy and FEMA and has been working in the area for more than 2 decades. She is the author of several books of FDI, FEMA, and international taxation. And my dear friends, I would like to congratulate CS Sudhaji for releasing FEMA practice manual day before yesterday. Thank you. Congratulations, Sudhaji. She is also a chairperson of Entrepreneur Now Committee of IMC and a member of Indo-French Chamber of Commerce and Industry, etc., etc. Further, she has been awarded many awards and recognition, including Women Empowerment through CA Profession by NIRC of CA Institute. So I invite CS Sudha Bhushan ji for providing her valuable insights and enlighten us with her immense knowledge and experience on today's topic. Over to you, Sudha ji.
Thank you. Thank you, Shubham ji, for the introduction. And thank you, Mr. Jariwala, for a wonderful session before me. And I would like to congratulate the Continuing Professional Education Committee for organizing this marathon on the of webinar and making use of the virtual world to maximum. To the chairperson of the committee, to the vice chairperson of the committee, Mr. Gyan Chandra Adukia ji, congratulations for the same. And yes, Shubham, my latest book is out a day before yesterday only. It's with Taxman, wherein I have dissected every section and every rule regulation under FEMA. So I'll share my presentation. You can see it? Shubham ji, you can see it?
Yes, ma'am.
Okay, thank you so much.
This
Thank
is
you.
visible.
Yeah. So Indian FDI policy, a very good subject for all of us. Now, I'll start with something like this, that from Neolithic age led by agricultural revolution to industrial revolution, to information age, and now to digital age, change has always been the constant. Change is the only thing which is constant. The world largest taxi company, Uber, does not own any vehicle. The world most popular media company, Facebook, does not create its own data. The world's most valuable retailer, that is Alibaba, does not have any inventory. World is changing. Out of the top 10 market capitalization company globally, only 2 are non-technology company, that is Saudi Aramco and Hathaway. Apple, Amazon, Microsoft, Alphabet, all are making value shift in the economy. And obviously we know the Zomatos of the world. Change is the part of life, and it has always been the part of life. But what has changed right now is the speed of change. The way world is changing is very, very fast. You don't know, you can't see the future, and adjustment is very, very at a very high speed. And the thing is that change is not an option right now. It has to be, apart from everything else which is changing, India is changing as well. And India is changing at a very faster pace. There was a time when we didn't have enough forex reserve to meet even a day's demand. And today, as on 31st December 2021, as on the data of 31st December 2021, our country's forex reserve was whopping 634 billion USD. This is equivalent to approximately 13 months of imports and higher than the country's external debt. Imagine this. As on the end of November 2021, this is as per our economic survey report 2022, India was fourth largest foreign exchange reserve holder in the world after China, Japan, and Switzerland. So this sizable accretion that has happened in the reserve has led to an improvement in external vulnerability indicators such as foreign exchange reserves to total external debt, short-term debt to foreign exchange reserves, etc. Now, these India's salient external sector sustainability indicators are very strong and much improved as compared to what it used to be in the time of financial global crisis or taper episode of 2013 that we have. And for instance, the import cover and the foreign exchange reserves are more than double now. And as per the economic survey, I'm taking all my database. So all the database that I have taken, my data points that I have taken in my presentation has been taken from either the economic survey report or it has been taken from DPIIT website because it comes with the FDI statistics every quarter. So what we were talking that as per the economic survey 2022, the combination of high foreign exchange reserves, sustained foreign direct investment and rising export earnings will provide a very good buffer against any liquidity tapering and monetary policy normalization that we have in 22-23. So the conclusion is that India is changing. India is changing. Let me tell you and substantiate this with few more facts to you. The amount of remittance under LRS that had been made in the month of January 2022 was 2018 million USD. The amount of ODI that was done in the month of February 2022 was 753 million USD. And the amount of FDI which is received by India as on 31st December 2021 was 17,933 million USD. And India is expected to grow at the rate of 8% minimum. I'm not saying it, everyone, you see any global body, IMF, World Bank, everyone is forecasting India's growth rate at least to be 7% and minimum 7%. We as a country are playing an increasingly more important role in global economic growth and has emerged as most beneficial and safe destination in whole world of investment. And there is not only one factor that is contributing to it, there is a whole lot of changes that are happening. Be it the deregulation of numerous sectors, simplification of processes, removal of legacy issues like retrospective tax, privatization, so many schemes that are coming from product-linked incentives and so on and so forth. And there are so many schemes that are being given by the government. There are so many trade bodies, trade facilitation desks, which are with different countries that we have numerous government initiatives created by government. We remember the time when we used to stand in queue for name approval, and now you see everything digital. All your government reportings, 95% of the government reportings, especially with RBI, have gone online. You don't have to go and stand in queue. You don't have to send physical documents to RBI. We are coming from the time when there used to be sectors in which the money could be borrowed. You remember that ECB when anybody used to ask us that, Madam, can we borrow? We used to go and check whether it is falling under those sectors in which the external borrowing is allowed. Now, we have a negative list of the sectors in which money is not allowed to be borrowed. Otherwise, the money can be borrowed in all the sectors. You can borrow money from outside India, pledge your assets to foreign lenders, give guarantee, take guarantee, do whatever to expand your business. There are only specified sectors in which the companies cannot take foreign investment. Otherwise, all sectors are open. In her budget speech as well, what Nirmala Sitharamanji emphasized on Sabka Saath, Sabka Vishwas, and Sabka Prayas. Definitely, with Sabka Prayas, we can make India shine in global space. So this is what is happening in international global trade, and this is the position of India as a country. Now, why this much of data? Why this much of sharing of information? Because we, as a chartered accountant, we are the custodians. We are the professionals which are relied on by RBI as a mediator, as their four eyes, as their two eyes. So any FDI in India cannot come without the valuation certificate being taken by a chartered accountant. Most of the inter-country trade that happen, most of the FOIMA regulations, you need a certificate from a chartered accountant. Adukia ji mentioned that FEMA is a act of only 49 sections. You know how many certificates that are required to be taken from chartered accountants under the act? Why? Because how RBI functions. RBI functions, there is an RBI, then there is AD Bank, then we chartered accountants are there, and then there is a management of the company. So first, anything that happens with regard to the foreign exchange, management of the company has to certify, then a chartered accountant has to certify, and on the basis of a certificate of a chartered accountant, AD gives you the go ahead, and on that RBI relies on that and gives you the go ahead. So that's why we chartered accountants are in fact the facilitators of the foreign investment in our country, and we have to attend this session and know what exactly is foreign direct investment policy, foreign investment policy of India is all about. Now, what is foreign investment as a foreign direct investment? Is a strategic investment in a country and is considered as a major source of non-debt financial resource for economic development, and it infuses the long-term sustainable capital in the economy and contributes not only towards receiving the funds but also towards the technology transfer, development of strategic sectors, great innovation, competition, employment creation, amongst other benefits. And India, as I mentioned, is playing an increasingly important role in the global economic growth and is coming as one of the safest destination for the investment in the world. Foreign investment as such is a capital account transaction from the perspective of Foreign Exchange Management Act. FDI is a capital account transaction. India presently have full convertibility with regard to the current account transactions only, and partial convertibility with regard to capital account transaction. What does it mean? It means that there are still the restrictions with regard to undertaking the capital account transactions. With the relaxation and liberalization of capital account transaction, India as such is systematically moving towards fuller account convertibility. However, it is only said it looks to be far away. Just for the reference here, I mean, we are not going to discuss what is current and capital account and all that things here. Just for the reference here, capital account transactions are the transactions which alter the asset or liabilities, including contingent liability outside India of person resident in India, or asset or liabilities in India of person resident outside India. Now, through FDI, the foreign party is creating asset in India. That's why it is a capital account transaction. Moving towards, just give me 1 minute, please. So there has been a shift between the government. So how the FDI till now was that it was regulated by the RBI. However, with effect from 15th October 2019, power to regulate capital account transactions with regard to the non-debt instrument have been transferred from Reserve Bank of India to the central government. The NDI rules, which has been given by the central bank, has replaced the FEMA 2022, which used to regulate the foreign investment in India till date. Now, what was the logic? So earlier, the foreign investment in India was regulated by Reserve Bank of India. Now the power has been shifted to central government. What is the logic? I mean, I think it's rightly shifted to the central government, and it was wrongly placed with the Reserve Bank of India. As you can see, the RBI is entrusted with making the monetary policy of the country, and fiscal policy of the country is made by the central government. So basically, monetary policy, it refers to the the activity of RBI influencing the quantity of money and credit in the economy, and fiscal policy is to by the government to make the decision about taxation, spending, where the money should come, and overall economic activity of the country. Now, RBI cannot be entrusted with the task of understanding which sector will need what amount of funds, which sector should be prohibited, which sector should be made under automatic route. So this power has rightly been shifted from RBI to central government as of now. Now, as of now, the central government has been given. So central government is dealing with the 3 tasks under the Ministry of Finance, is interested with the work of coming with rules on non-debt instruments. Ministry of Finance is entrusted with the enforcement directorate is formed for managing FEMA and enforcing FEMA in PMLA, and Ministry of Commerce and Industry, Department of Promotion of Industry and Internal Trade, is entrusted with the work of formation of India's foreign direct investment policy. So the present regulatory framework of FDI in India constitutes the rule frame by the central government under Section 46 of FEMA and the consolidated FDI policy, which is issued from time to time. The government has put in place the framework on FDI, which is transparent, predictable, and easily comprehensible. This framework is embodied in the circulars on the consolidated FDI policy, which may be updated on the annual basis. However, it is usually not. It has not been the track record of DPIIT to update it on the annual basis. The last updation had been in 2020. So DPIIT, Ministry of Commerce and Industry, is entrusted with the task of policy pronouncement on FDI through consolidated FDI policy, circular, press note, press releases, which are notified by the Department of Economic Affairs, Ministry of Finance. In addition to the rules and policy, the total regulatory framework of FDI in India over a period of time consists of rules, regulations, consolidated FDI policy, circular, press notes, press releases, a clarification, etc. So this is the complete framework of the Indian FDI policy. Now, one thing which was not clear till now, and which always there was a lot of ambiguity, that in case there is a conflict between it. So till now, what was the case scenario? That RBI used to come up with the regulations with regard to FDI, and the government used to come with a consolidated FDI policy. So RBI is coming up with one thing, and it is not updated in the consolidated FDI policy. And now also, if you can see here, there are two government departments which are interested with the different work. So one department is interested with the formation of rules, and another department is interested with coming out with the FDI policy. So there may be the cases wherein there is a conflict between the rules and the FDI policy. So there was, earlier it used to be conflict, and in the FDI policy, which came in October 2020, it got clarified that in case there is a dispute between the rules and the FDI policy, in that case, rules are going to prevail. So now, in case there is something is being said in foreign exchange management, non-debt instrument rules 2019, and there is another thing which is being said in consolidated policy 2022, and those two things are in dispute with each other. In that case, NDI rules are going to prevail. There used to be master circulars which do not come. It has been done away with now. So brief on the history, the first FDI policy was issued in April 2010. It consolidated all the prior policies, regulations under FEMA, press note, press releases, clarification issued by DIPP, regulations by RBI under FEMA, and reflected the then current policy framework on FDI. Subsequently, the government issued the consolidated FDI policy in October 2010, April 2011, 2012, 2013, 2014, 2015, June 2016, and August 2017. After August 2017, it came with the FDI policy directly in 2020. Until now also, this policy has not been updated. Now, between this period, 10 press notes were issued, 2 press notes were released in 2018, and 4 of them are got issued in 2019 and 20. And there were 4 press notes that were issued in 2021, and 1 has been issued in 2022 till date. And all these 4 press notes that had been released in 2021 liberalizes the Indian FDI policy further liberalizes the further Indian FDI policy further. So the Indian FDI policy as such is divided into the consolidated policy, which is Indian FDI policy. I am not talking about the NDI rules here. We'll be concentrating on the consolidated policy only. So what we have discussed, that we have 2 sets of so-called regulations, 1 rules and 1 FDI policy given by 2 different departments of government which govern the foreign investment in India. And in case there is a conflict, in that case, the rules are going to prevail. So as such, the FDI policy is divided into 5 chapters. Chapter 1 talks about the intent and objective of the policy. Chapter 2 gives definitions like of the words and concepts, we can say, that are used in the FDI policy. Chapter 3 talks about the general conditions on FDI. Chapter 4 talks about the procedure for government approval. And Chapter 5 talks about the sector-specific conditions on FDI. Now, for the purpose of FDI in India, there are sectoral caps which are defined for each sector under the consolidated policy or India rules read with the press notes issued by DPIIT from time to time. These sectoral caps are the threshold limit till which the FDI can come in India in a particular sector. First, the sector is specified, and then the routes through which the FDI can come is specified. And for example, if the sector falls in the prohibited sector, the investment in that sector cannot be made. If the investment falls in the sector with sectoral cap, government approval is required till the time it falls in the approvals route, and below that it can come in automatic route. And as I said, we have now negative list of sectors. That means that in the sectors which are not mentioned in FDI policy, they can come in automatic route. Automatic route, what does it mean? Automatic route means that investment does not require approval of government and only involves intimating the Reserve Bank of India post the inward remittances. Apart from the few expressly prohibited sectors in which the FDI cannot come, almost all the sectors fall under the automatic route. So you can receive the investment first, and post that you make the necessary reportings that are defined under the NDI rules, mode of reporting and mode and method of reporting in it can be the reportings can be done. Now, as opposite to the automatic rule, and under approval route, prior approval of government is required before making investments in India. Such an application for approval is made to the respective ministry in which the sector might fall. And there used to be a foreign investment promotion board to which the application used to be made. However, it was abolished in January 2019. Now, application under approval route can be made online, and respective government ministry is mandated to clear the proposal of investment within the specified time. So the sector listed in the the sectors listed in FDI policy works like a negative list. All the sectors which have been specifically mentioned in FDI policy, which have not been specifically mentioned in FDI policy, they fall under the automatic route. We have already discussed that. Now, approval route includes the industries like mining and mining of titanium. Very few industries are presently in the approval route. Now, for the purpose of FDI, there are three categories of different sectoral cap: up to 26%, up to 49%, and up to 74%. Apart from these limits, there are two more limits: 51% under government route in multi-brand retail trading, and 20% in government route in banking, public sector banking. So we can again conclude that negative list of sectors in which investment cannot come. Otherwise, investment in India can come in every business. What are these businesses in which investment cannot come? As in which the investment is prohibited, in which Indian FDI policy says that in these sectors the investment cannot come. These are the mainly the speculative sectors. If you see, like lottery business, gambling and betting, and chit funds, nidhi companies trading in TDRs, real estate business, manufacturing of cigars, and activities which are not open for private sector investments like atomic energy, etc. So, although the FDI policy is clear in most of the sense, however, there are some ambiguity here and there. However, some ambiguity comes also in understanding. A lot of time the queries come to us that, Madam, FDI in India prohibited? FDI in real estate in India is prohibited. No, FDI in real estate is not prohibited. It is prohibited in a very small segment of real estate. That is real estate per se, real estate, and it does not include most of the activities that we think that are included in real estate. For example, development of township, construction of residential and commercial premises, these are not included in real estate. So ambiguity may be there in some sector. However, in some sectors, there is an lack of understanding and reading also that happens. For example, one of the sector in which there is a definite ambiguity is in the space sector. What it says that space establishment and operation, it comes under approval route. However, nothing at all is defined that what is establishment, what is operation, what includes manufacturing in space, and it is just left to the imaginations of the investor to understand whether the money is going to come in approval route or it is going to come in automatic route. So yeah, I mean, there are ambiguities as well, but very few ambiguities which are there. Government has been taking a lot of measures for increasing the FDI in India, and because of the efforts taken by the government, FDI policy has resulted in increased FDI inflows, setting up new records. FDI inflows in India, it stood at US 45.14 billion in 2014-15 and has been continuously increased since then. India registered its highest ever annual FDI inflow of USD 81.97 billion in 2021. It reflected a growth of 10% as compared to the previous year. The increase has been on the back of 20% in 1920. In the year 21-22, FDI inflow grew by 4% in the first 6 months to reach USD 42.86 billion as compared to 41.37 for the same period last year. Over the period, and why this FDI? What are the various initiatives that the government has been taking? It's been constant liberalization of FDI policy, curbing of opportunistic acquisition and takeover, improving on the transparency and to rationalize the processes. FDI monitoring and the FDI monitoring cell has been formed. A lot of initiatives that have been taken by the government. Now, if we talk about the liberalization, over the years, government has been liberalizing the sectoral caps as well as the routes under which the investment can come in various sectors. Now, recently, if you see, there has been one after other. 2021, as I said in beginning, was a year of liberalization only. One after other, the government had been rationalizing and liberalizing the Indian FDI policy. Recently, through press note 2021, the government relaxed the sectoral cap in defense sector and in manufacturing of small arms and ammunition under Arms Act, which is 100% in which 100% sectoral cap is liberalized to automatic route up to 74%, and government route beyond 74% from 49% under the automatic route. Private security agencies have been liberalized to sectoral cap of 74%, wherein entry route is automatic up to 49% and government route beyond 49% and up to 74%. Also, single brand product retail trading is fully through automatic route. Now, instead of being under automatic route up to 49% and government route beyond 49% as per the Foreign Exchange Management NDI rules 2019. Intermediaries or insurance intermediaries, including insurance brokers, reinsurance brokers, insurance consultants, corporate agents, third-party administrators, surveyors, and loss assessors, and such entities are at 100% now. So 100% FDI under automatic route has been permitted in Indian entities engaged in coal and ignite mining for captive consumption, for power project, iron and steel and cement units, and for other activities permitted under and subject to the provisions of Coal Mines Special Provisions Act 2015 and Mines and Minerals Development and Regulation Act 1957. So there has been a lot of liberalization, defense sector, insurance sector, petroleum and natural gas. Press note 3 of 2021, it issued to permit the foreign investment up to 100% under the automatic route in case of where the government has accorded in principle approval for strategic disinvestment of PSU engaged in petroleum and natural gas. Huge liberalization happening presently. And not only liberalization, apart from that, there are so many things that the government is doing, from curbing opportunity acquisition and takeover. You remember that when 1% of HDFC Bank was taken around 2020 during the lockdown period, when there was a lot of threat of opportunistic acquisition and takeover, the government immediately amended the FDI policy to amend that any country which shares a land border with India, or where the beneficial owner of an investment into India is situated in a country which shares a land border with India, it can come only under government rule. So this was to protect and taking immediate action to prevent the opportunistic takeovers and acquisitions. Further to that, there has been a lot of measures to improve the transparency and to rationalize processes, including amendment of standard of operating procedure to improve ease of processing FDI proposals. The government ministries are having the time-bound timelines under which they have to dispose of the applications under the approval route. Apart from it, FDI monitoring cell has been formed, which follows up with applicant investor to expedite FDI policy proposals with a view identify and hurdles, if any. Also, an interministerial committee has been constituted under the chairmanship of Secretary of Department of Promotion of Industries and Internal Trade to take appropriate decision on delayed proposals and those escalated by administrative ministries and departments. The FDI as such in India has been there in all the sectors. Different sectors have received different amount of FDI over a period of time. Also, the states-wide distribution of FDI is different. 17% of the FDI equity inflow have been received in service sector, 10% in computer software and hardware, and followed by 8% in telecommunication, 6% in trading, 5% in construction, development and automobile industry, 4% in chemicals and construction activities, and 3% in drugs and pharmaceuticals and hotel and tourism. As the service sector is the largest recipient of FDI inflow in India, according to World Investment Report 2021 by UN Conference on Trade and Development, India was 5th largest recipient of FDI in 2020, improving its rank by 4 places from 9th position in 2019. In 2020-21, India registered the highest level of FDI that we have already seen. So, and also the state-wise FDI flow has been different. 25% has been received in Maharashtra, and I am the proud resident of Mumbai. And 19% has been received in Karnataka, 16% in Delhi, 10% in Gujarat, 9% is received in Jharkhand, and minor share of 5%, 4%, 3%, 1% by Tamil Nadu, Telangana, Haryana, West Bengal, and Uttar Pradesh, respectively. So FDI is scattered over different states in India, and as such, and yeah, and also it is being received from all over the world. However, there are few countries from which we receive more FDI, like Mauritius, Singapore, rather than and US, and also we receive FDI from the countries like Germany. That is as such, if we can say that India has a robust and dynamic FDI policy. It balances the facilitation of FDI on one side to reap the benefits of foreign funding, and to keep a check on the sectors which are greater national interest and are not speculatory in nature, which are speculatory in nature. So government policy is balanced. Where the money is required, it comes under automatic route. Where the money is, it can be of speculatory nature, it is prohibited, like buying and selling of property is absolutely prohibited. So basis that Indian FDI policy is very robust, dynamic. It places India in an investment friendly jurisdiction. Every Indian company is capable of receiving FDI, and every Indian company is capable of complying with all the regulations of FDI. It is on each one of us to assist the companies in receiving the FDI by proper compliance and proper understanding of the regulation. As far as the government is concerned, it is doing its absolutely 100%. It is pro investment. It is on its way to make India a pro investment destination. There are, I understand that if I can rate India in an investment friendly jurisdiction, we can rate India 7 out of 10. There are professionals, there are people who portray the FDI policy, the FEMA laws, the NDI rules as the very tough, very complicated to apply. However, it is not the case. India is a very investor friendly jurisdiction, and all the procedures mostly are online and it is easy to follow. If you have any queries, I'll be very happy to take. That is all regarding the Indian FDI policy from me today.
Thank you, Sudhaji, for your wonderful insights on this area, which a lot of people have never touched upon. And really, it's an amazing session. First, I also, personally, I've learned a lot in terms of what is though we have some of the understanding of capital account transactions, but the way you have taken it to a next level and the way you have given us the knowledge of legal and regulatory frameworks in India, and that is really commendable. So now I would like to take up the questionnaires that our lovely audiences are having. In case someone may have not put it their question, they can obviously ask for in the comment box and send us the queries. So let me take the first question. Ma'am, due to this Russia and Ukraine war, has it impacted India in terms of FDI, or globally, whether this has impacted FDI?
Okay, it's a very, very interesting question as such. Depending on which side you are.
Though it is from my side only.
Okay, we have a real example wherein we had received. It was not an FDI. It is a transaction with Russia that the company had, and because of the sanctions on Russia, the company is gaining a lot. So it depends on which side you are. However, I think we are in a position to gain. It is on the better side for us.
That means if we are in India, we are at the better side.
Definitely, yes.
Okay. So moving on to the
Ukraine and Russia direct investment is very less. So as such, directly we are not impacted that much.
Okay. So there is one question from Pankaj Singh. He wanted to ask, for starting the career in FEMA, from where we should start? Being a chartered or?
Yeah, I think, starting a career in FEMA is, FEMA as such is a is a huge, huge ecosystem of opportunities. It starts with due diligence in FEMA to advisory to valuation and compounding. Lot of sets of professional opportunities are there, including professional certification. Now, starting it will be obviously with the knowledge. And when we talk about the subject, the knowledge lies in the basic framework. So if you are clear about basic framework, I think you can build on. Like बाकी एक्ट में क्या होता है that more in lies in rules and regulation. FEMA के अंदर basic में ज़्यादा understanding चाहिए. Rules and regulations are little bit straightforward. So basic understanding you start with, and I don't know if I'm allowed to say, but in any case, we are also coming with institute also, we are coming up with the courses. One is starting with 23rd of April, and there are so many courses that they can attend to start with.
Also from like I would say there are two types of CAs which are in practice. One is for the beginners, like those who have started their own practices, and in the 5 or 10 years of their practice, what benefit they can have from this FEMA or this law? What kind of assignments they could even get?
Well, I told you that it starts with there's lot of, every regulation has some or other certification. As I mentioned, FDI in India cannot come without the certification of valuation by chartered accountant. Now, when you are receiving borrowing, every month a certificate from a CA is required that you are using the funds for which you had taken. Every year you need to file in case of the unincorporated entities, LOBO, PO, an annual activity certificate which needs to be authenticated by a chartered accountant. So as in, we can go on and on regarding the certification only, or certification forms a very small part. Then there are non-compliances for which compounding needs to be done. And mostly companies are not aware of these provisions, so we can help them out with the compounding. And another thing is FEMA due diligences. I would suggest all my professional friends who are auditors and who are CFOs of the companies, they should do FEMA audit of their balance sheet every year, at least twice, looking into, because every item of balance sheet has some or other applicability of FEMA. You can very well see whether it is complied with, if not complied with, whether it is falling in the time frame in which it can be complied. If it is compliable, do comply, otherwise go for compounding. So FEMA audit is another whole gamut of service which can be provided in that. And many more.
Wow, that's really great. I hope this will be helpful to all the audiences that we have currently.
I would like to add one more aspect to what Sudha just said. For the young members at present, as we all might be aware, startup is a very booming subject in its own. Although it differs from FEMA and FDI aspect, but it is more into finance. So if we look forward for startups, we can have assignments like mentoring, making project reports, helping them get investors pitch deck, and so on.
And Sunay ji, under FEMA also, startup gives you another level of advisory, because only startups are allowed to issue the convertible notes. And when startups are receiving the foreign funding in the form of ECB, they can use it anywhere. There is no restriction on the usage. So those things, if we know, we can really help our startups as well.
And Sudha, I have one more question from my end. As far as FDI is concerned, so what is the average rate of return? I know it varies. I'm just asking, what would be the range of average return which FDI investors are seeking or they are getting in actual or in practice?
As you will know that we are not allowed to give any assurance of the rate. So when you are receiving FDI, there is no assurance that can be given on the FDI. However, it depends from time to time, from company to company. And On a normal scenario, I have not seen in my practical experience that they are receiving, some companies are really receiving good interest, and some companies don't receive that much of good interest.
Okay.
I'm sure
Return
this
on investment, return on investment, yeah.
I'm sure this seminar is good enough that even a lot of people have many queries related to their own profession, and that will really be a great insight for them. So moving on to the next question that we have from Sundra Bahu. They wanted to ask why and how to resolve when there is a multiple layers of prescriptions of equal legislative sanction, say RBI, driving powers under the RBI Act, and issuing guidelines, notification, and other executive issuing notification driving power under another act, for example, under FEMA.
I can say from FEMA perspective, but I think Mr. Sunay can throw light on it.
Yeah, Shubham, could you come again? Could you repeat the last?
Yeah. Why and how to resolve when there is a multiple layer of prescriptions of equal legislative sanctions, say RBI driving powers under RBI Act and issuing guideline notification, and other executive or another person from some other department issuing notification with which are driving power under another act, for example, FEMA. So when there is a clash.
Yes, in case of clash of two statutes or act, firstly, both needs to be resolved, like we need to reply or do the compliances under the both different statutes. And if at all there's a contradiction there, then we need to bring up that same aspect to both the departments. Like, look, in FEMA, it is this. Under RBI, it is this. According to us, to the assessee, we have this solution option possible. So maybe we need to keep both the departments, government officers in loop and try to find an amicable solution. Maybe meeting up the higher ups or at the JC and commissioner levels, like and maybe in RBI there are other posts whom they address there. So some amicable solution would be possible there.
I would like to say it from when ambiguity is concerned, there inconsistency between various regulations. I think FEMA is the best example vis-a-vis the Companies Act. Earlier, there was a conflict between under how many days the shares needs to be issued. FEMA said 60 days, Companies Act gave you the time of 180 days. And right now, you know, there's a concept of registered valuer, which has come. Companies Act makes it mandatory that you have to get a valuation from registered valuer. FEMA doesn't make it mandatory, okay? And in few cases, the client is also required to take the valuation from merchant banker. Poor client, imagine he has to take the, under Companies Act, he has to go to the registered valuer. Under FEMA, he has to go compulsory to a CA or a cost accountant. Or if it is a listed company and it needs valuation under through merchant banker also. So these things right now, either we are complying with all. I mean, in case such a inconsistency is happening. However, there is lot which is done by the regulatory also to iron out these inconsistencies, like the one I mentioned. One was that in case there is a dispute between NDI rules and consolidated FDI policy, which one will prevail? So now this time consolidated FDI policy make it clear that NDI rules will prevail. Yeah.
Okay, that's really great. Also, there was one question from Hemant Kothari. Please suggest a good book and resource for staying update on FEMA.
I don't want to market my book here, but we have come up with a new book with textment on FEMA. And I can assure you that it is a work of my 20 years of working in FEMA. It's a good book, and it includes commentary. It includes as much as practical examples as possible, a relevant compounding order. So it's a good book. Otherwise, Institute also is coming up and updating its own publication on FEMA, which I am working on, and we will be out with the Institute publication also in one month's time or so. And BCAS is also working on the publication on FEMA, so that can also be used once it is out.
And also one more questions. I think this is the last question that we have from Viraj Goyal. He wanted to know, could you please let us know the sectoral caps, segment and category wise, as it keeps on changing? So, to Sudha ma'am.
Yeah, so sectoral caps I discussed in the presentation, and I think until unless the sector is very specific, like one of the sector which we have dealt with was space industry, space sector, very, very specific sector and very, very specific product that our client company was making. Apart from that, all the sectors are under automatic route only. However, if you go to the annexures of FDI policy, it gives you categorically the sector and the route. So one has to know the sector. You go to FDI policy and it gives you the sector, and accordingly you can see it whether it is falling under automatic route or approval route. अगर approval है तो कितना % तक automatic है, कितना % उसके बाद कितना approval तक ले सकते हैं and all that. So I will share my PPT so that it can be shared.
Sure, that would be really great. And first of all, I want to congratulate both of you and want to thank both of you for being here and giving us the amazing presentation, as well as the to elaborate much wider, I would say, and it's really a good session, I would say. So this has been a great evening with such an amazing audience and our lovely viewers and audience. And I would like myself to thank each and every one of you for making this day a wonderful one. Thank you, Sudhaji and Sunil Jariwala-ji.
Yeah, Shubham, before you end, a hearty vote of thanks to you for doing the wonderful job today with us and taking this session forward. You put up the queries, Q&A in a very excellent manner. I would say one of the best I've ever encountered in my series of sessions.
Thank you, sir. Thank you.
Thank you, madam and sir. It was indeed a great pleasure listening to you both, the speaker, on the suggested topics. And I am sure the same feeling is expressed by all the listener. And I am very grateful to moderator Shubham sir moderating this session wonderfully. And my thanks are due to both the speaker and moderator. Thank you so much once again.
Thank you, Chanda ma'am, for
thank you, Chanda
taking out your time and inviting all of us to this wonderful session. It's a pleasure meeting you both. Thank you, Ayaz. Thank you, everyone. Thank you, Chairman, Vice Chairman, and all the faculty members and participants for joining this session. Thank you, everyone.
Thank you, sir. Thank you. Okay, now we may